One of the things I like about real estate is it's driven by what happens in people's lives. Always going to have people passing away, and there's going to be homes that need to be renovated that are 20, 30 years and nothing's been done to them. And some family that don't want the burden of having to do anything with that. They just want to sell it to someone as is and not have the headache. You're always going to have people starting off new lives, getting married, and now they need to have a new place to live.
Talk about the macroeconomic impact, just the circumstances, inflation, construction costs, etc., that have impacted your business, and how have you guys been able to adapt?
I didn't think that I would end up being an entrepreneur. I got a mechanical engineering degree in the 90s. I spent about 10 years in that field. One day I was getting ready to take a trip to Japan for work. My boss at the time handed me a copy of the Rich Dad, Poor Dad book. I read that on the plane, learned about passive income, and I realized that I wasn't doing anything to create any passive income just with my engineering job.
Hello, welcome to another episode of Save Yourself podcast, brought to you by Unlimit Wealth. I'm here again with my good friend Jordan Cole. We've got a guest today, Mr. Ray Burkhalter, a friend of ours that we've known for a number of years now, ran into each other at a couple of real estate networking groups. And Ray, thank you for joining us, man.
I am really glad to be here today.
Yeah, thank you.
Looking forward to the conversation.
Well, we're going to get kicked off, man, and ask a bunch of questions and talk about you a lot today. But where can you start and kind of tell us your background? When did you get into the real estate game? Where did you start? Where did you go to college? What was your first career move? And kind of give us the whole story about Ray.
All of that. All right. There's always a backstory, right?
That's right.
Yeah. So I'll start quickly with where I am today. So to put all of it into context, but I've got a private lending business here in Alabama. We fund a lot of projects around the state. Talk more about that later. So that's today. I didn't think that I would end up being a private lender. I didn't even think I would end up being an entrepreneur. So I went to the University of Alabama in the 90s. Got a mechanical engineering degree, and I just thought I'd have a career in that. I enjoyed the work. I spent about 10 years in that field. Ended up working for an automotive company and getting to do some international travel, and that part of it was great. But then at the same time, when you do too much of that and you're gone for weeks and weeks and weeks on end, it can get a little bit old. So my wife had been interested in real estate for a while, and I wasn't so much. And then one day I was getting ready to take a trip to Japan for work, and my boss at the time handed me a copy of the Rich Dad, Poor Dad book. And I read that on the plane on my business trip and learned about passive income. And I realized that I wasn't doing anything to create any passive income just with my engineering job. So it just kind of started a chain of thoughts, a chain of events that led me to look at different ways to get passive income. And I realized I wasn't going to be a singer and get royalties. All these things that you could do to get passive income wasn't really a fit for me. Real estate was, and with my wife already being interested in that, it turned out to be a great fit. So I didn't know much about real estate at the time. One of the most important things I felt was to get educated. So I started going to trainings, these 3-day weekends. And back in the early 2000s, there weren't informative podcasts like this. Now people can get sometimes pretty good information from YouTube videos. But back then, you just had to pay the ticket and go travel somewhere and learn. And so we learned about marketing for real estate investors, raising money for real estate investors, structuring deals, all of that. And started a business of buying properties, and my wife and I together, we're buying them, fixing them up, keeping some for rental, selling some of them. And because one of my early classes was raising money for real estate, if we use the bank twice, that's probably an exaggeration. We learned early on how to go to private individuals and get them to fund our projects. And
well, from there, and we're going to keep going, but your first deal, if you can bring us back, what was that first? You took action the first time. Do you remember that one?
I'm glad you asked about that, because there's an interesting back end of that. So being an engineer, you can tend to be an analysis paralysis more than other people. So I'd been analyzing, and finally some friends of ours, another couple that was interested in real estate, we partnered up with them. We did a joint venture purchase of a triplex. We lived in Murfreesboro, Tennessee at the time, and we bought a triplex there and cleaned it up and had a nice rental unit. So that was our very first one. It turned out to be a good project. Unfortunately, a few years in, our friends ended up getting a divorce and they wanted to dissolve the partnership. So we sold the house and made some money, but here's the back end of that story. So as a private lender now, last year, we still have some connections in Murfreesboro, and there was a real estate investor up there and he wanted to buy a property, and it was on Cortlandt Street. And I said, let me check it out. And it was like 2 houses down from the triplex that we had purchased. And so we went back and looked at what it was worth now compared to when we had it and sold it. Incredible.
Small world.
Just the growth of that. But yeah, he's like right there at the same property.
Murfreesboro looks a lot different today than it did back then, I'm sure.
It does.
Yeah. Well, tell us a little bit about REI funding specifically. And so what got you into the lending world and how that works?
Yeah. So there was a transition point, right? We were really good at using private money to fund our deals. And I never thought about using that same strategy to fund other deals. I knew how to be the borrower. I never thought about being a lender. And in fact, this is a story I've shared before, but I feel like sometimes pitfall stories can be more valuable than success stories. So I'll share both, but the pitfall story is before I learned how to be a private lender, again, as I said, I knew how to be the borrower. So I had just quit my engineering job to do real estate full time. I'd rolled over my 401k to a self-directed IRA, and I loaned it to a guy in Colorado Springs that I'd met at one of those conferences. And he said, hey, I'll give you a great rate of return on this, and you're going to be backed by not only my own residence but this other property. And so I knew how to make a loan to him, but I didn't know how to underwrite it. I didn't know what I didn't know at the time. And so yes, there was a deed of trust in Colorado that was backed by his home and by this other property. What I didn't know though was getting title insurance, getting appraisal, and doing all these things. So when time went by and I realized that he wasn't going to pay me back, and I started looking at how I was secured, I was in second position on one property, and he ended up getting a divorce and getting out of that property. There was no equity left. I was in third position on the other one. So ended up losing all of that retirement money that I'd been putting away through my career. So it was
expensive education.
It was an expensive education. But at that point, and this is not a personal growth podcast, but I feel like it's important to put it in there because anybody that's considering doing something new, you may make mistakes along the way. And I could have said, hey, this whole real estate thing, it's not going to work. It just took all of my money.
You can calculate that return and it's going the opposite direction, right? Yeah.
I'm wanting to grow, not go in the hole. But I didn't. Thankfully, I had good personal growth mentors around me, and a strong faith in God that this was going to be okay. And I learned it for a learning point instead of a point of defeat. Yes, it was a failure, but it has made me. We've closed over 300 loans with REI funding partners, and we've not repeated a mistake like that. It's made me very careful and cautious with what we do because I had that hurtful, painful mistake right up front of doing things the wrong way.
I'm sure that analytic background of engineering doesn't hurt. You're able to look at a deal and calculate a deal. So when you do look for a deal now, is there any specific criteria you're looking for your lenders that you guys have to check a certain amount of boxes? How does that work for you? What's the process? If there are people sitting out there today that are looking for that next property and they think, well, I want to hear about this private lending deal. How does that work?
Absolutely. If you're wanting to lend, there's the 4 C's. So we look at the character of the person we're lending to, or is this someone that's going to pay me back? Or we do a soft credit pull. And so what are we looking for there? Is it just the score? No, we're looking to see, do they have bankruptcy? Do they have foreclosures that's happened? Do they have creditors showing up on there that's trying to collect from them? Sometimes divorce happens, medical things happen, and people's credit score suffers, but that doesn't mean they're just not paying their bills. So we look at that. We look at character, we look at credit, we look at their cash situation. Because if they're coming to us to do a project, they're using our private money to leverage that project, but they need to have cash on their own to put a down payment, to start the renovations, to make the monthly payment. So we're analyzing that to see if it's good. And then finally, capacity. Do they have the ability to do this project? If they're brand new and they want to do a carpet and paint renovation project, that could be a good fit. But if they're brand new and they want to do a tear it down to the studs renovation and move walls and things like that, then that's not a good match. So those are the four key things that we look for.
Okay. And then on the other side of the deal, how are you guys bringing in capital from the lenders themselves? Are you guys going outside to get that capital?
Yeah, absolutely. For many years, it was just me and Gail, my wife. We were doing a handful of deals, but a few years back, we made the decision to scale up. And so now we use our money, but we also use a lot of outside money, people that we call our money partners, people that want to be involved in lending, but they don't want to go find the borrower and underwrite the project and manage construction draws and do closings and collect payments. And then at the end, you got to release the lien. There's a lot of steps to it that some people don't want to go do all of that. So we do. We're around 11 million right now of assets under management, and that's growing. So we just work to balance up really good quality projects with, the right money partners.
When you started your business on the lending side, what would be the most important part of building a team that you would note if you were to encourage someone that was interested in getting involved in the same line of business that you are? Because it requires more than just you and your wife, it sounds like.
Yeah, it does. For us, I didn't come from an entrepreneurial family or background. I as I said earlier, I'm thinking I'm just going to have an engineering career. So many things that maybe other people grow up with, there wasn't a gut feel for me there on that. So powerful books have shaped me along the way. I mentioned, the one earlier, the Rich Dad, Poor Dad. Around 2018, somebody that I was doing some work with at the time and some speaking engagements for real estate investing, they handed me a copy of the book Traction. And that book describes the entrepreneurial operating system, EOS. And for me, it was like I didn't take any business classes in engineering. And so it was like a master's class in business for me. So we took that. It helped us see what kind of organizational structure we wanted. And from that, I could see the first hire that we needed. And for us, it was a loan processor. I was good at finding the opportunities to fund, finding the money partners to match up with that, structuring the deal, all of that side. Gail was doing her side on the books, collecting payments, managing draws for the construction draws, all of that. But here's this piece in the middle of get the loan closed, right? You got to collect information from the borrowers. You got to verify. You got to work with title companies to get a closing date set and achieved. And guess what? Real estate investors need things funded quickly. That's why they tend to come to us instead of going to a bank. Instead of waiting 30 days, 5 to 7 days, they're in and out. They have their closing and they're working on the property. So for us, it was that loan processor was the important first hire, and it was EOS that helped us see that.
Yeah, and that helped you scale up. Since then, talk about the macroeconomic impact and just the circumstances, inflation, construction costs, et cetera, that have impacted your business, and how have you guys been able to adapt?
Yeah, it's definitely been a factor. And it could have been a real negative had not other things within our economy been at play. So as I knew the interest rates were going to rise at some point. There's people the next generation back from me that thought I was silly for saying that. They're like, they're always going to be this way. I'm like, no. When I bought my first house, they were over 8%. It's not crazy to think that they could go back up there. So that did have an impact on the ability of our customers when they finish a property to be able to resell. It slowed things down a little bit. And when the rates were going up so quickly, there's some uncertainty around that, and uncertainty tends to make people sit on the sidelines. Now that things have settled out somewhat, what we're seeing, especially here in Alabama, is there's still a shortage of housing inventory. And two big reasons for that. And number one, it's hard to believe, but all the way back to the 2009, 2010 time period, we got shut down in housing and construction, especially for single family, for so long. There were so many years after that things were just frozen. People weren't moving. People were scared. They didn't know what to do. So there was a gap there several years that building new construction lagged so far behind that it's still not caught up. The second factor there is that with the interest rates going up, you got a whole broad group of people that are still out there in that 2 to 3 or maybe 4% range. And if they don't have to sell, because if they go and finance something else, they're going to be in at that 7-ish%. They don't want to move and take that hit. So they're sitting on the properties. The new constructions are not coming online fast enough. So with the shortage in inventory, we've really been seeing prices hold steady, and projects that are nicely renovated, if they're on the market compared to just a maintained home, these tend to look better. They tend to sell faster. So from our standpoint, it's had an impact, but again, not the negative impact that I would have really thought, because there is this ongoing shortage. And
For sure. Always opportunities, no matter what.
Yeah. And as we sit here, we're March 14th today, St. Patrick's Day. I wore green, by the way, and you guys didn't get the memo. But as we sit here in 2024, and not that you have a crystal ball, but what do you foresee, or what could you see in the next 5-10 years is where the market's going to go? What maybe even just 1 or 2 years, if we can get that,
Yeah. In that shorter term, one of the things I like about real estate is it's driven by what happens in people's lives, right? We're always going to have people passing away, and there's going to be homes that need to be renovated that are 20, 30 years and nothing's been done to them, and some family that don't want the burden of having to do anything with that. They just want to sell it to someone as is and not have the headache. You're always going to have people starting off new lives, getting married, and now they need to have a new place to live. And they may start off with an apartment or renting somewhere, but eventually they're gonna need housing. You got people having kids and needing to upsize, right? So all of these things are going to keep going on. That's one of the things that makes me feel good about real estate. Will the rates go up and down? Yes. Or other factors in the economy are going to happen. Yes. But I think overall, I think from what I'm hearing from people that are really looking at nationwide statistics and really diving into the numbers, is that we're still a few years out from getting that inventory, the housing inventory shortfall, corrected. So in that medium short term, I don't think it's going to be a lot different than today. Obviously, if the interest rates start going back down, it's going to free up the market a little bit. I think for people, they're going to be a little more willing to sell. I don't want to see prices continue to go up too fast, because that can be unhealthy. So I think we may be past maybe the worst of the volatility. But again, it's election year, so who knows what's going to come with that. Right. But if people keep level heads, then I think we could just see either holding the same on real estate values or a healthy increase. Yeah.
Talk about your initial exposure, talking about books. One of the books, or one of the concepts, Infinite Banking, you got exposed to 4, 5, 6, 7 years ago. When we started that conversation, we started talking through marrying real estate, marrying the funds, the derivation of the funds, and where they could be warehoused. Kind of walk us through that experience you had initially, just kind of uncovering this concept.
Well, I mentioned books having an impact, but also mentors have had a really important impact in my life and in my path. And so I didn't read a book about infinite banking at first. It was from a mentor. Actually, it was the same guy that taught me private lending. I mentioned I made that big mistake not knowing how to do private lending. Well, not long after that, I had an opportunity to go to a 3-day training on private lending and become part of that team and eventually help teach and coach people in how to be private lenders. So that proved to be a really good mentoring relationship for me. And several years later, the same mentor introduced me to the concept of infinite banking, and he was putting it into kind of a whole financial system, and he called it the vault. Where do you store the money to make the best use of it? And I was pretty skeptical at first. I mean, the only reason I ended up going with it was because I trusted him. Because as I looked into it, that engineer brain, I want to understand how does it all work? What behind the scenes? I mean, what am I getting into here, and what do I need to know? And it just seemed like one question always led to two more, and then two more, and I could understand the basic concept of it, but at the end of the day, I just kind of had to have faith and step into my first policy, and then get my wife's policy, and then another policy, and so. It's really understanding the broader concept of how it worked, having to push through, needing to know more details, and then just finally having trust in the person that was telling me it was a good thing.
Yeah, and initially, a lot of real estate investors that either we come across or that come across this concept, if they are going to meet it with a little bit of hesitancy, will do so by saying, well, my real estate is going to return way more than a life insurance policy, so why would I even consider this? And I think one of the things that you've done a good job of, and other people who have just at least started with the system, is understanding that it's not about picking between the two. It's not about picking between returns in real estate or what you're doing well that has served you well for years and having to sacrifice those in order to stick money into a whole life insurance policy. Because Lord knows we would even admit, and we're proponents of this, that real estate is going to return that, but it's an and asset, not an or asset. And that's one thing that we want to continue to talk about, and talk about in your mind, how are you able to kind of marry that? I'm sure reading about or uncovering as much as you did about the policy and the infinite banking strategy in and of itself, wanting to know all about the cogs in the wheel and how it all works and how it fits together, but then understanding a little bit more about, this fits together in conjunction with the stuff we're doing with real estate.
Yeah, thankfully for me, right up front, it was just an extra tool in the toolbox. That's right. I already knew how I would use it and what that was going to look like for me. So it once I bought in mentally and then signed up, the rest of it was pretty easy. And I don't do a lot in purchasing real estate anymore. So I use my policy loans. I get my loan out at this much and I lend out at this much, and I get a nice spread on that. And it's been very easy access and, very, very predictable. But what I like about it, it is an additional thing that I have that helps my investing. But what I really like is the insurance side of it, and just how to bring some of those death benefits forward and make them potentially useful in life if something catastrophic happens and I need that. So I didn't have a lot of insurance in place before.
You're able to check that box as well.
Yeah. So I never really was that interested in term life, and I'd never looked into permanent life insurance. So, it's been good, really good from that standpoint.
As Jordan mentioned, the relationship with real estate investors and infinite banking and the process of the Rich Dad Poor Dad book, what you learned in there is to have your money work simultaneously in multiple places, have your money work as hard as you do. And in that relationship with infinite banking and real estate investors is, OPM. You're using other people's money. You're using the insurance company money and allowing your money to grow and mature tax-free, and then using their money to capitalize. And just like you're teaching your investors, your lenders, or, even the bar, use other people's money to maximize an asset and maximize your returns. Did that correlation with infinite banking kind of when you finally discovered that and did your research, it should have appealed just as you appeal to your clients.
Absolutely. Well, I don't remember if it was you guys that gave me Nelson Nash book, but I did read, that one, but it was after the fact, after I'd already, bought into it and kind of crossed that bridge of do I want to use that strategy? But that was really helpful, the examples that he showed in there, and just it gave more depth of thinking and strategy to it. So that was helpful. And yeah, it has worked great for me to be able to use it for my investing. And then, I to be honest, I really don't ever put it back. I just take the next policy loan the next year because I'm in a position to keep it working. If I was in and out of some deals and I had a very low volume of opportunities, I'd be doing the back and forth. But we're funding new projects every month, and so I don't have to leave any downtime there. I can consistently make that spread, and then it's compounding, right? That the initial spread is whatever it is, but that's all compounding.
Full principal. Yeah.
For about five or 6 years now, which is great.
Yeah.
Yeah,
and it's great to see it growing. It's great to know the policy value's growing, and I'm able to have access and use it and have another level of control. I know I can get that policy loan like that. If I want to go get a line of credit or expand something over here, and I'm sitting down talking to a banker, explaining what we do, you'd think that the banking industry, because of they're built on lending, that they would understand private lending, but they really, in most cases, they don't. It's not that they're not smart enough to, they just really haven't been exposed to it, and it's so foreign to them to think of lending coming from somewhere other than an institution like that. It takes them a bit to wrap their mind around.
They know what they know, yeah.
That's a credit to you because you understand the way that they think as a bank on the banking side and how they make money.
Exactly.
And once you understand how they make money, then you can kind of peek behind the curtain all of a sudden to realize, okay, who's really pulling the strings here and what are we trying to do?
Yeah.
So that's really a credit to you for just understanding the mechanisms behind it.
It is so helpful to understand not only, the way they think and the way they structure things, but even, the same paperwork that we use and the same liens, mortgages that the bank would use to secure a property. That's exactly what we use. The same title companies that a bank would use and the same title insurance that they would use to be protected. We do the same thing as private lenders. We just, banks will lend 80% or more loan to value. We're typically 65% or less. So we're more conservative with them. We're doing shorter term, projects. So it's like we learn how they work and then take the best pieces of that and do it on a private scale.
Now, for your business now, we know we talked about Gail. She's retiring now, but how do you see your business kind of scaling over the next few years? How many deals do you guys have going at all times? Just a little more detail about it.
It's been nice growth over the past few years, and we've had some years where we doubled. We're big enough now that I don't want to double every year, but we've added on a staff. We've been blessed with a excellent team. I mentioned the loan processor. That was something Gail was a little bit hesitant about. She'd always done that, and you have to know what you're doing, and it's really niche. And I said, you know what? Somewhere out there's a person that understands loan processing that's looking for part-time work, because that was one of the hurdles. Gail was kind of thinking, well, we got to go hire someone, and they're going to be full-time. And I said, no, there's someone is out there. Well, a few months after that, we find someone that had spent 20 years working at a title company with an attorney, and that's what she knew how to do. And she spent her other time working at a soup kitchen, and she didn't want full-time. So here's this perfect person that understands how to do all of that. So we put together a really good team. Yeah, now for us over the next few years, it looks like scaling up more of what we do here in Alabama, just connecting with more real estate investors here in Huntsville, Birmingham, Mobile. That's our three biggest markets. When we want to go out of state, we still have connections in Tennessee because that's where we were when we got started. So we have some growth opportunities there. We've worked really hard on systems and processes. We forked out a lot of money last year for a lending software that helps push out. We pull money every month from our borrowers now by ACH. We push it out to our money partners by ACH. So they get a deposit in their account every month, and really nice looking statements that go out. So we've built the infrastructure now to be able to grow more. And then also we see the struggles that our borrowers have because they're growing entrepreneurs, and in many cases they spend so much time out on the job site and kind of being the foreman of the job, if you will. They're really good at that front office work, but a lot of them don't have a really well built back office. So we're in beta testing right now with a group of our customers to have a back office support system for them that's going to help them learn and do the things that they need to do to really scale their business up, but put the same kind of foundation in for their business that we put in with ours a few years ago. Doesn't look exactly the same from private lending to real estate investing, but a lot of similarities there. So that's a growth that we're really excited about, because that's something we can do nationwide. We don't want to do private lending nationwide. We like being local to our state, to our region.
Build relationships. You've got your people, yeah.
Well, Ray, we want to wrap up with one question that we like to ask everybody, just to kind of get a little bit of trip inside your perspective and your mind and kind of your context. How would you describe success now versus maybe how you would have described it 10, 20, or even 30 years ago?
The younger version of me would have described success as having financial targets and hitting those targets, and maybe even before that a little bit, climbing a certain amount up the ladder in my engineering career. That's what I would have really thought. As a lot of those things have happened and come to fulfillment, I start to see things like, I really look at the areas of my life like my spiritual health, physical health, healthy relationships, business or career, and then finance really is last for me now. It's still important. It's an important piece of life, right? But I've just kind of flipped all of those other things. So success for me means a healthy marriage and supporting things that are going on at my church, and taking care of my health, being healthy enough to have an enjoyable retirement when it's time for me to join Gale in retirement. So, the passive income piece, having that in place, and continuing the trajectory up there is a piece of success, but pouring into others, like the team that I mentioned, we have several people on that team that they're going to be with us long term, and I believe in them so much that they're the next generation for us, that we're giving them an opportunity to buy into our company. So they have a vested interest as they take it forward. It's not only they're working hard to grow the business, they're going to get current and future benefits out of that. So I don't know, I said a lot there, but just pouring into other people, and then just kind of looking at the whole part of life and not just financial success.
Well, man, we thank you. We thank you for pouring into us and our audience, and we enjoyed it today. Thanks for coming all the way from Tuscaloosa to come join us today. We've really enjoyed it. Well, thank you. Thank you for joining us, and that wraps up another episode of Unlimit Wealth, Save Yourself podcast. Thank you, sir.
Awesome. Thanks, guys.